Can you hear me now? Oh my God. Oh no. 13 minutes, you guys. 13 minutes before I looked at the chat and found out none of you can hear anything I'm saying. Oh my God. I just explained everything. Oh, that's embarrassing. All right. Sorry, guys. I should look at the chat sooner. I really should. Oh, man. Okay. Well, at least I got a practice run. Now I can give you guys the pre-market analysis really fast because I already know exactly what to say. Okay. Don't judge me. All right, guys. So basically what I was just saying that you guys have no idea of, essentially I see this as a chop zone this morning. Okay. So it's going to be this area right here from about, actually I was a little tighter than that. Let me zoom in here. Yeah, around 60. So we're talking this area right here from 69.60 down to 69.19. This is our chop zone this morning. So I don't want to make a prediction about where the market is going to go inside this chop zone because I basically see it as equal probabilities of up, down, or sideways. It is slightly higher probability we're going to go lower, but it's not enough to get me to want to short the market right away this morning. So to me, the trades to take this morning is going to be when the market gets to Friday's low. We're either going to be going long if it gets below Friday's low and comes back in. That's a look below and fail trade, in which case we'll be looking for the market to head back up towards, the 69.50s, or we're going to get new selling down there and then the market is going to head lower. So if you are going to get short the market inside the chop zone this morning, I would highly recommend you take profits at yesterday's low. Okay. The reason that I feel this way is because of the V-shape reversals. So if you look at the way the market sold off on Thursday, we had this massive crazy sell-off to the downside, but then it completely retraced right back up to the opening price. Okay. That's not bearish. That means that this was all just about all the leveraged ETFs and all of that type of stuff in the market. We were just, breaking all those breakers and taking out all those stops and forcing everybody to adjust things. But the fact that the market came right back up tells us there really wasn't that much bearish momentum, which is why we just went sideways all day on Friday instead of continuing lower. Because Friday, the market was just playing tug-of-war, trying to decide where to go next. Friday's range was inside the overnight range. We did not test the overnight high or the overnight low. That is extremely rare. That only happens like 2% of the time. So that alone tells you this market just didn't know where to go. It was just trying to decide where it wants to go next. And another thing that would tell you that, we closed at almost exactly the same price we opened. So after all this up and down all day on Friday, we literally came back to the same place. And then the last thing that tells us that is that the point of control was almost identical on Thursday and Friday. That's the fairest price to do business. So that again tells us that just nothing changed. The market spent the day trying to figure out what it's going to do next. And so then you say, well, but Charles, the market sold off massively over the weekend. Surely that's very bearish. No, the sell-off is bearish, but it retraced right back up into Friday's range. Okay. But we may even open near Friday's closing price today. We've still got another 15 minutes until the market opens. So this is telling us that the market doesn't really need to go lower. Over the weekend, they just did the same thing, in the overnight markets in Asia and Europe. They just did the same thing we did yesterday. They just caused this massive panic selling and then completely retraced because they're not really bearish. They don't really know the market is going to go lower. We're just squeezing people, taking out stops, and then coming back again. So to me, this morning is a little bit bearish, but honestly, I'm pretty much neutral and I see it as an equal probability of up, down, or sideways. So if I don't want to guess, I want the market to tell me which way it's going to go. I got to wait until we get to the chop zone high or the chop zone low to figure that out. If we get up to the chop zone high and we get new buying, we're probably heading to Friday's high. Okay. If we get to the chop zone low, we get new selling, we're heading much lower. Then I took a minute to just kind of go back and look at the market on a longer time frame. So if we look at the market on a weekly time frame, the market is just in balance. It's just going sideways. Okay. For 7 weeks, we've just been going sideways, or I guess 6 weeks. We've just been going sideways, right? So the market is trying to decide. We got to the all-time high and it's trying to decide, can we keep going or do we need a dip? Do we need a pullback in price? Okay. If we need the dip, if we do need a pullback in price, we can assume over the weeks ahead, we need to make at least a move that is the size of this balance area, okay, which is where the market has been going sideways. So we need to make a move, that's going to be down towards the 6,700s. So if we do get below Friday's low today and we do get new selling, I will get very, very bearish there because I think there's potential this week to make a very big pullback in price. Okay. Coming back to clean up a lot of this old weakness that's been here since, November and December. But right now at market open, I should not be bearish. I should not be thinking we're coming down here. I need to first see the market generated information take us down here. I need to see the new sellers stepping in. Then I look for that continuation lower. If we do start to get those new sellers at 69.19 this morning, we can look for a move to the previous day's low. If we get new selling there, we can look for a move down towards the overnight low. I don't know they'll make it all the way to the overnight low today, but that's the sort of end goal for the market if we get that new selling below Friday's low, is to try to get to that overnight low. Okay. Any questions on any of that from the chat? And now I am actually looking at the chat. So I'll see your questions. Map says, can you repeat 13 minutes? Yeah, I just did it in 7. I did it in double time, y'all. Right about now. Double time, Joe, brother. Okay, so the people in the Discord are telling me that they have sound and that they're okay. So you guys got to hear the whole in-depth explanation, and the people on YouTube got screwed. It is what it is. No questions from anybody? Comments, concerns, criticisms? Let me know in the chat. Got a lot of people hanging out this morning. Sonny's in the house. Rich, Ray, Tom, Will, Brian, Olive, Trevor, Loyas, T.Y. Lambert, Boomer, Frito, C.A.J., Nico, Pradeep, Flyer, Rich, Map, Christopher. Yeah, lots of people hanging out. I need to not do sound more often because then I get to find out how many people are here. 230 says major echo. Are you guys hearing major echo? Hello, hello, hello. 8 minutes to go. Tamp in the house. Good morning to you. All right. Well, if there's no questions, let's do a couple things real quick just to kill some time for the next 8 minutes while we're waiting for the market to open. First thing I want to do is I just want to mention that I have a workshop coming up next week. If you head to marketsandmind.com, you can find out about this. You can also just go to my website, piratrators.io, which is on the top of the page. But this is basically a workshop I only run a couple of times a year. It's a 2-week-long course. It's taught live through Zoom. So it's basically like a Zoom that you just join and you watch the lessons live there. I teach everything you need to know to be a professional trader. I teach you how to read the auction process, how to develop yourself and your system for trading, how to manage risk, how to learn to think in probabilities. I teach you basically everything you could possibly need to know to be a professional trader. So it is from February 9th to 20th. It is, 5 days a week, 4-hour-long sessions every day. If you can't watch those sessions live, you can always rewatch the replays for up to 1 year. Okay. So if you are interested in taking this course, now is a great time to sign up because it starts next Monday, 1 week from today. And we'd love to have you. So I'm going to teach you everything from what are the tools that I use, what is the path to profitability, how to read the auction process, both on a longer time frame and intraday, how to think in probabilities, how to read gamma exposure. I teach all my personal trading setups. I teach you how to develop your edge over time, the habits and routines that you need to be successful. I teach about mindset, which people think is silly, but it's a really important one. And then the last day we go through, we review everything and answer questions and make sure that everybody walks away with the knowledge that they need to be a profitable trader. Okay. So if you are interested in that, head to marketsandmind.com. So if you are new and this is your first time here and you're like, what the heck am I looking at here on the screen? I'm so confused. Let me just walk you through what these two charts are. If you're a regular, you've heard this all before, but the market doesn't open for another 6 minutes. So who cares? Okay. The chart on the left is a market profile chart. It's a price action chart. So this is basically just showing us where does the price go? How much time does it spend there and how much volume does it bring in? So think about a candlestick chart like a two-dimensional chart. Candlestick shows us where price goes over a given amount of time, and it shows us how much volume came in over a given amount of time. But what market profile does is it lets us see the exact level, the exact price level where we spent time and where we brought in volume. We measure that time based on the letters that you see. Those are called TPOs. And so the letters, wherever there's more, that's where we spent more time. And the volume profile, the little volume nodes that you see in here, that's where the market brought in the most volume. And that's where we get our edge for understanding what the market is doing and knowing where to enter trades and not enter trades. So for example, this morning, I'm drawing a chop zone right here. Why am I doing it? Why am I picking these areas as my chop zone high or my chop zone low? Well, I'm looking at the cumulative volume over here, and I'm saying if this market is going lower today, this should be the resistance. So if we start to get above there, what's going to change in the market? Shorts are going to start to quit. They're going to start to cover. And then all of a sudden we get a move up, not because the market is bullish, but just because we're squeezing the sellers that have been shorting in here. Okay. So that's why I pick this area as my chop zone high. Why do I pick this area as my chop zone low? Because we've got an overnight low and a previous day's low right there. So we know anyone that was going long on Friday, that's where they're going to start to get squeezed and the market is going to start to go lower. Not even necessarily because it's bearish, but just to squeeze those buyers. By being able to recognize those areas where the auction is going to change, where people are going to stop being bullish and become bearish, or stop being bearish and become bullish, well, then that's where we have an edge, because we want to be the first to get into whatever the next thing the market is going to do. So first thing in the morning, I can't know what the next thing the market is going to do. It might go up to that chop zone high. It might go down to that chop zone low. It might spend 3 hours just grinding around inside of here. I don't know. So how do I enter a trade? Right? If I don't know what the market's going to do next. But once we get to those areas, that's where I know what comes next. Because it is simply, we bring in new sellers and we keep going lower, or we reverse and then come up because we squeeze all the sellers, or we keep bringing in buyers and we go higher, or we reverse and come back down because we squeeze all the buyers. So I will know what's happening once we get up there or down there. In the middle, I do not diddle because that's guessing what the market is going to do. And then the chart that you're looking at over here on the right side of the screen, this is a Bookmap chart. This is an order flow chart. So what this is showing us is where are the orders that are in the order books. The volume are the actual contracts that trade hands. The liquidity is contracts that could trade hands. And that's really important to be aware of. Not necessarily because a large node of liquidity means the market is definitely going to go to it, But because bots, a majority of the volume that trades the ES every day is computers. They're high frequency trading computers. And those computers use liquidity to function. Liquidity is how they're programmed to make decisions. So when you see changes in liquidity, you will see changes in the market as a result. Okay. So if, for example, if, for example, you've got this liquidity up here trying to act as a magnet for price and it's not working and price starts to push away, all of a sudden they lower it down. Well, now the bots, beep, boop, beep, boop, beep, boop. That's actually a good target to try to get to. We're going to go long. And then the bots start to go long to get to it. This was too far away. They didn't think they could get there, but that caused them to reprogram, which changed the market from going sideways to down to turning around and going up. Okay. And so if you can notice these changes as they happen in real time, you can predict, not necessarily knowing, the market is going to go up or down from here, but knowing something's about to change. And so if you're in a trade, maybe you're moving your stop. If you're not in a trade, maybe you're entering a trade. If you are in a trade that's profitable, maybe you're choosing to just go ahead and take profits. By recognizing where changes in the order flow take place, you have an edge in executing trades intraday. So the market profile tells me what kinds of trades I want to take. Do I want to be long or short? Where do I want to get into it? And the order flow is the execution mechanism that tells me, yes, get in now. Yes, take profits now. Yes, move your stop now. Right? It's the thing that tells me you're right, Charles. It's a good thing you're in this trade. Or, oh shit, you should change your mind, Charles. The order flow is saying something's about to change. So having both of these things side by side on my screen all day, I have an edge in trading. I know where to do business and what kind of business to do. And I have a mechanism for executing those trades that gives me an edge. It gives me an advantage over anyone that's not watching the order flow. If they're not seeing these changes, they're not going to know to get out of their trade or to get into their next one. But I will. All right. Market is open. So now as we are inside that chop zone, we're going to be paying attention to what does the market do inside of here? How does it behave? So right out the bat, we got short covering. The moment the market opened, ding, 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 a bunch of people that were short just got squeezed. So far, 220 contracts have been stopped out in the first 30 seconds. So you say to me, but Charles, I was bearish because the overnight went lower. And then I say to you, you got to understand the auction process. Inside the chop zone, it could go either way. And so you got to wait to see what happens. Let them squeeze all these sellers first and then watch the market go lower, right? Don't chase the prices it's going up because you see that it's just stops getting taken out. This is not real buyers. This is not real momentum up right now. We're just taking out sellers. If you can recognize the difference, you can know that you shouldn't be entering a trade or you should. And as you guys already know, to me, there's no reason to enter a trade yet. This is just a chop zone. It's going to go up and down a lot of times, sometimes very, very fast, because traders are going to keep trying to force themselves into a trade in the first 5 minutes of the day, because they're going to be convinced that if they don't get in now, they're going to miss it. But don't you worry one little bit. There'll be plenty of opportunities today. Even if we go 30 points up and down, up and down, up and down first, there will be a great opportunity. Okay, so first move of the market this morning was short covering. We just popped up to take out all these stops. Now we're coming back down to the opening price. We just bounced. So we are turning this area into support. That is slightly bullish to see. The next question is, can they get up to our chop zone high, 69.60? If they cannot, the chop will continue. If they do get up to 69.60, that's where we start to look for the next move the market is going to make. So what did I talk about earlier this morning? I said this area right here, this large cumulative node in the, 6950s. This is the area that if the market is going to go lower today, this should be where sellers start to pile on. Okay. This is where they should start to be getting short. So we are looking for sellers right now. Do the sellers start to come in? Okay. So order flow, I'm looking at this and I'm saying the market needs to come back up and poke through this high. So you see that we had this liquidity here. The market came up to it. They disappeared it. Right as the market got there, they spoofed it and took it away. And so then the market was like, oh, never mind. We're going to come back down. But what did they start to do? They started to add it once again. So the market wants to come back up to that liquidity at 60 once more. Now, if they spoof it again, it might turn around and come down. But it wants to test that high. Will they spoof it? Disappear it? There we go. Okay. So this is it, folks. This is where we find out, is this market really bullish or did it just come up here to take out stops? If we reverse and start to come back down here, we will look to head through the opening price at 69.40. If we continue to bring in new buyers up here, we'll become bullish for continuation higher. This will be an excellent place to start watching this order flow. Do these nodes of liquidity above price disappear or do they stay there? Do new nodes of liquidity start to appear below price? Taking out a few stops there at the high. Boop, 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 boop. Okay, so I would now describe myself as bullish because we are getting a combination of both taking out stops, short covering, and new buying up here. Do not go long at the high. This thing needs to come back down and look for support here around 60. Okay, I would say 55 to 60. So you don't need to go long at the high just because I'm saying I'm bullish. But I do think when they come back down, they will find support and that we will continue to the upside. So I would describe this as bullish as long as we are above 69.55. If we come back down through 55 at this point, there's a very high probability we're going to head back through the opening price. One of the reasons I love scenarios like this is that I can go long in the support as the market comes back down, But even if I get stopped out, I can make the money back because I know it's either going to hold and keep going up towards yesterday's high, probably make it all the way to yesterday's high, in the hours ahead, or it's going to fail and it's going to come back through the opening price. So even if I take on a loss on my long trade, I'll have a chance to make that back on a short. Food for thought, I say. Food for thought. Okay, here's where the tug of war starts. So what's order flow been telling us? They've been stacking volume. They've been stacking liquidity above price. They just keep adding more and more and more, and that keeps pulling price to it. Well, now a new friend has just joined the party, and that is the liquidity at 69.50. So any bots that have been trading targeting the upside liquidity, they're now going to stop doing that because there's liquidity below. So now we really need to bring in new buyers, real humans that want to go long to keep this momentum going. We're looking for support around 69.60. Pradeep says, I will definitely take the course, but after 2 months due to being a busy schedule. Yeah, if you want to take the course, you got to sign up now, and then you can go watch the replays 2 months from now. But it's a live course. So I don't know when the next one is. I'm going to do it probably in the summertime, but I don't know. So if you don't take this one, you may not get a chance. Yeah, so the feeling I'm getting, I am bullish, but this thing needs a flush. It needs a dip here. We're seeing that a lot of the momentum up was stops being taken out. The stops and iceberg setting on Bookmap is showing us that. But we're also seeing that a lot of the larger positions that are using icebergs are getting short here. Now, that doesn't mean they're entering short because they think the market could go down. They may be taking profits on longs. They may have been the people that bought that overnight low over the weekend, and now they're taking profits at the overnight high. So this doesn't necessarily mean the market is going to go down, but it tells me the momentum up is going to slow down, and we really need that flush, that dip to bring in those stronger hands. Okay. So again, just to teach order flow, market's going sideways, right? It had momentum up Then they brought in this liquidity, and then the market lost its momentum up. Those bots stopped being willing to go long because there was this liquidity down here. And then look at what happened the moment they disappeared that liquidity down there. The market started going up again. Okay? So when I tell you that intraday liquidity is what moves the market around, you will know that I'm telling the truth. You just witnessed it happen. Market was going up. They added liquidity. Market went sideways. They took it away. Market went up. Now they're adding it again. Market's coming back down. I'm very interested in seeing what happens with this liquidity at 69.75. Does it fill, becoming resistance, or does it just disappear? If it just disappears, we're going to get another push higher of short covering. They're shorting the market right now. See those 700 contracts that just went short? So if this thing, what that computer program is probably doing is it's probably getting short right now with its stop up here. So as long as that holds as resistance, that bot is fine. But if that just disappears out of nowhere, that bot stops are going to get taken out and the market's going to go boop and poke another 3 or 4 points higher just like that. Let's see what happens. Here we go. It's not disappearing. They're letting it fill. And there it goes. Tam says, where exactly would you flip the trade? So if I was long the market right now is where I'd take profits on that long. If the market comes back down to this area around 69.60 where we're looking for support and it finds it, I would go long again. I would not, to be crystal clear, short right now to try to get back down to 69.50 or sorry, 69.60 because the momentum is up. So there's always a chance when you have momentum, you just bring in new buyers at the high and you just keep going. So if you're long and you take profits here, that's fine. You can buy the next dip and get back in your long. But if you get short here and they do bring in the new buyers and keep going, you're going to get squeezed. And right now, looking at the order flow, they're still doing this game of adding more liquidity above, which is pulling price to it. So it's a great place to lock in profits if you're long, not a place to enter a short. And that is a different thing. Okay. So the market's finally getting some resistance, right? The sellers are finally starting to try to take control of the market. Now the question we're asking ourselves is, do we bring in more buyers? Do we stay up here? The longer that we stay up here, the more time we spend, the more volume we bring in, the more likely we're going to get the next push to the upside. I feel we need a dip, at least down to 66. But when you have momentum, there's always a chance they just bring in new buyers at the high and keep going. So that's what we're watching for. Do we bring in buyers? A lot of tug of war here. All right, the buyers are holding. They're looking for another push to the upside. So the next resistance is going to be around 69.83. We'll then look for the market to come back down to this area we were just playing tug of war in and see if we can turn that into support. I want to emphasize the fact that this entire move up so far today is short covering. Okay. Or I should say more short covering. Obviously, there is new buying happening here, but it's more short covering. All right, here's the resistance right here. It stops getting taken out. That's making us go up. And it'll shock you how far the market can go up as long as you keep, look, we just took out another 400 stops. Okay. As long as we keep taking out stops, the market can keep going up. But you don't want to misunderstand what you're reading and think, oh, this means the market's going to go up all day. No, it's not, right? It's going to go up until there's no more stops to take out. So there's a very good chance, because of how quickly we went from the opening price to the previous day's high, there's a very good chance we're going to run out of steam above yesterday's high. It just can't keep going straight up on short covering forever. And so I think this thing is getting close to running out of steam. Because anybody that got short on Thursday of last week, anybody that got short overnight on Thursday night, anybody that got short on Friday, and certainly anybody that was short in the overnight over the weekend, where are their stops? Where's the last spot they could put their stops? It's going to be up here. So intraday, we're looking for a little dip to find support and then come back up and break this high. But on a day-to-day basis, it's probably going to run out of steam there and come back down. We'll have to wait and see. Man, they're doing it again. They will not let it dip. That tells me there's a computer program somewhere that knows that if they can get above Friday's high, there's going to be a lot of liquidity up there. Lots of stops to take out. And they want to go there first before they do whatever they're going to do for the day. You see that each time resistance comes in, some iceberg comes in and buys it up. They do not want to let it dip. Come on, market. You can do it. Tam says, say the price goes back to support level, but then it keeps falling. Would you cut your long and enter a short? So the only place I would do that, which I would no longer do it now, right? Because now we have more information than we had earlier on in the day, was when we first came to the chop zone high. That was right here. Okay. So we were looking to turn this area into support. So if the market had pushed up there and it had come back down and I got long at support, right? And then it flushed through, I would reverse that trade because then the probability from there to the opening price is very, very high. Okay. Does that make sense? That's its own thing, separate from everything else. You have a chop zone, you get above the chop zone high, you fail, you come back down, you are likely to cross through the opening price. That's a set of probabilities that are not connected to anything else. That's not what happened today. We did not poke above the chop zone high and then come back down and test it. What happened? We poked above that chop zone high and then we just got short covering. That just took us straight up. So that is gone now. That's history. That trade doesn't exist anymore because we got new information. That new information is this short covering. It's this momentum that we're now getting in the market. So each opportunity, each high probability trade setup exists in and of itself. This would not be a time to reverse if you got stopped out. So let's say, for example, you're going to buy right now at 73. You're going to buy support right here. You see that node of liquidity. You're going to buy that support. Let's say you got to figure out where to put your stop. So you're going to put your stop down here. Let's say around 63. Okay. So that's your risk. Your target is you think you're going to get up here above yesterday's high. So that's your reward. Okay. You think we're going to take out some stops and you'll be able to take profits in here. So you're looking at that trade. Should you reverse here? Absolutely not. Right? Because anywhere above the chop zone high, it's still bullish. So it could come down here and stop you out and then find support and turn around and go up. So you don't want to be short there, but you have to put a stop in your trade. You can't just go long now and put your stop all the way down here because then you're risking as much as your reward would be. And that's a shitty trade setup. Again, forget everything else. If you're going to enter a trade, always make the reward more than the risk. And you will have a million times easier job trading with that one simple rule. So in that scenario, you would just get stopped out, lose a little bit of money, and then wait for your next opportunity. So the market comes down, you buy it, it keeps going, it stops you out, it finds support and it comes back up. Great. You look for the next dip into support to buy to get long, and then you make your money back from that loss on your next trade. Or it comes down, it doesn't find support, it keeps flushing lower. Well, now you know the market is going lower, right? You wait for resistance, you get short, and then you get the next trade lower, and you pay for your loss from the first trade. This is a concept that a lot of traders struggle with. It is okay to lose money in a trade and be stopped out. It is not okay to just randomly take trades where you have no statistical edge. So you get your edge from two things. You get your edge from understanding the auction process. So you're saying, what is the most likely thing to happen next? That's part of your edge, but you never really know, right? Because markets are random and anything can happen. So the other part of your edge is risk management, managing the type of entries you're willing to take versus what you aren't, and managing how much money you're going to lose per trade. And if you do the risk management part right, there's nothing wrong with being wrong on the guessing where the market's going to go part, because your winning trades will always pay for your losing trades. Simply put, if when you lose 1 point, and when you win 2 points, you can lose twice and win once, and you're break even. And so if you play that out over 20 trades, 30 trades, 50 trades, 100 trades, you only have to be right about 40% of the time. You can literally be wrong more than half the time and still be profitable. But you have to use risk management. And this is where a lot of traders struggle. They don't understand combining those two things. Combining a market understanding and an ability to predict what the market will do next and understand what levels that's going to happen, and risk management, which is the discipline in entering your trade in a very mechanical way so that you know mathematically you have an edge. Speaking of edge, we have none now. Clearly, we can see the Bookmap has just gone dark. So there's some news dropping right now. We got to let the news bots grind around here a little bit, and then we'll figure out where the market is going next. News bots. Newsy news bots. They love to take out all your stops. News bots. Okay, so that support isn't holding. So we're looking for a dip back down to 67 for support there. Remember, the news bots love to take out stops and then reverse. And the market goes right back to doing what it was doing before. Listen, I cover all of this in detail in my Mastery of Markets and Minds workshop. I worked hard to set up this workshop because I spent years listening to people on YouTube and reading books on trading and, listening to podcasts. And what they all missed was they all give you a piece of the puzzle to being a consistently profitable trader. They all give you this little bit or that little bit or that little bit. But I could not find anywhere any sort of education for traders that is all encompassing, where for one low price of $500, which you can make in a day of profitable trading the ES, okay, that you could get all the information that you need to combine together to be able to have that consistent profitability. That's what the workshop is all about. So if you are thinking about it, like I said, it starts next Monday. You might as well sign up now. marketsandmind.com. marketsandmind.com. Join us. Take your trading to the next level. Learn to read the market the way I read it, but learn to manage your risk. And that's about managing your emotions. It's about a lot more than just what's on the chart. It's what's in your head that makes a difference. And that is really hard to figure out on your own. I know from experience, it takes years and years of losing and experiencing pain and suffering and having to take a good hard look in the mirror and take responsibility for why things aren't working for you. Well, I'm going to map it all out so you don't have to go through all that. So you can start your trading journey, 3 weeks from now with all the knowledge that I've accumulated from years of painful losses. That seems like a pretty good deal for $500. Yeah, these icebergs are back. The don't let the market dip icebergs. So the next potential resistance is going to be around 95. That could be a major reversal for the day. If we get up here to 95 and the market can't bring in new buyers up here, we'll probably come all the way back down to the opening price. So I think we're set up for one more push to the upside. And then we find out what comes next. David says, what is the website again? Marketsandmind.com. Marketsandmind.com. Charlie going to teach you how to trade. Charlie going to take years off your learning curve. Okay, so the market just created what we call a poor high. That is when it reverses two TPOs at the exact same level. Well, there you go. I was about to say that significantly increases the odds we will repair it and continue higher. And it did it before I could even finish my sentence. So again, the market just made another sweep to the upside. What was it? Stops. I cannot emphasize enough. This move up is really more stops than new buyers. So that last set of stops to take out is up here around yesterday's high. That could very much be where this market runs out of steam and comes back down. Marketsandmind.com. Oh, I'm a silly goose. Come on, market. You can do it. Okay, got a weak high now. Again, increasing the odds will poke through. There it is. Okay, so up till now, in between the market open and now, over the last 30 minutes, what we've been talking about is intraday movement. We've been talking about breaking out of the chop zone and then getting short covering, right? And as the market has worked its way higher, it's just been taking out more and more stops. Taking out sellers, taking out sellers, taking out sellers, taking out sellers. They just did it again, taking out sellers, right? That's what's been getting us up here. So that's intraday momentum from short covering. Now that we're at the previous day's high, we're going to have a conversation about a bigger picture idea of what's happening with the market, which is like, does the market want to keep going down over the days and weeks ahead? Or does the market want to turn around and start heading up over the days and weeks ahead, right? That's what we're going to find out over the next 10 minutes or so when we dance around yesterday's high. If we can start to bring in new buyers up here, that tells us the downside momentum is over and that we're ready to start trying to get back up to those all-time highs. But if we fail, if we pull back down through the opening price today, that's telling us we're going sideways to lower in the days ahead. So this is a really key moment intraday right now for our trades, and a really key moment on a daily time frame about what the market might do today, tomorrow, the next day. New buying up here. Support above yesterday's high is bullish. No support is neutral to bearish. So let's see what happens. I suspect we still got some stops. This was not enough stops. So we still got a few stops to squeeze here. And then we'll look for those new buyers. Anytime the market works its way up to a previous day's high, that is a potential reversal point for the day, because some people are going long and that's where they're going to start taking profits. And some people are waiting to go short. They're watching the market go up, but they're bearish and they're waiting for their chance to get short. That's where they'll start to enter the short. So that's why I say this is such a key area right here. Either we can bring in new buyers, we can convince people to be bullish here, or we're coming right back down. And I mean all the way to the opening price. Obviously in the hours ahead, not instantly. And I will just tell you, Bookmap is giving me we're going to squeeze a few more shorts and then this thing's going to flip in reverse feeling right now. I'm just looking at the icebergs and the way these icebergs are setting up. It just feels like this market is due for a flush. And we're not there yet. This is how we do it. This is how we squeeze them. Get them long at the high, then we pull it down. JT says, are you going to trade live in the workshop? So I don't trade during the workshop. I take the 2 weeks off because I can't do both at the same time. I can't teach a lecture and be in a trade. It's hard enough to live stream and be in a trade, but to teach a lecture and be in a trade at the same time, I don't. But I will call out trades live. So basically the way it works is it's a 4-hour session, and usually the lecture part of the session where I'm doing like a PowerPoint presentation and I'm walking through all the knowledge I need to share, that's usually about 2 to 3 hours of the session. Then the last hour to 2, depending on how long the lecture is, I'll be doing live. And if there's a trade, I will call it out. I will show it to you in real time. We will track them. And of course, as I said, on the Monday of week 2, I teach all my trading setups. So I'll walk you through exactly how I make every trade, how I decide. And then, what's funny is that's what everybody thinks they're signing up for. Everybody thinks I just need trading setups. Charles, just tell me your trading setups. How do you trade? Where do you enter trades? Tell me. And I cannot emphasize enough that that's not actually going to help you at all. I'm going to do it. I'm going to teach it to you. But what you really need to be successful as a trader is you need to develop your own trading setups. And why do I say that? Because the way you execute trades is partially about what the market is doing, obviously, and that's the same for everybody. But a big part of it is your own personal psychology, right? You have to learn to understand your own strengths and weaknesses. Some people like to scalp little trades along the way. Some people like to sit in a trade and wait for it to play out over a longer time frame. Some people like to trade balance. They like to trade when a market is going sideways. Other people like to trade momentum when a market is heading in a direction. And what you have to figure out is, what are your strengths and weaknesses? Then you have to custom tailor your trade setups to your personality and what works for you. And that's what I teach in the workshop. So I'll give you all my setups, and when they happen live, I'll talk about them live and I'll point them out and I'll tell you, get long here and put your stop here, take profits here. I'll do it, but that's not really what's going to help you. What's going to help you is I'm going to teach you how to think like a trader. Think in terms of reading the market, and predicting what it's going to do next, and also in how to execute your trades, how to plan your trade setups that fit for you. And when you do those two things, when you combine a market understanding, an ability to read a chart and predict what the market's going to do next, with a system that is custom tailored to your personality and your strengths and weaknesses and your account size, that's where the magic happens. And that's what I'm telling you. Nobody else teaches this stuff. Everybody just says, do what I do. And that's great because, 5% of the people that are taking that course are going to have a similar personality to the person that's teaching the course, and they'll do very well and they'll find success, and then they'll make money as a trader. But the other 95% of the people who have a different personality, it won't help them. And that's what I hate about trading courses, right? Is that some people sign up for a trading course and at the end they're like, oh my God, that was amazing. I learned so much. This is going to give me a huge edge in my trading. And other people take the course and they're like, that's fucking useless. This didn't help me at all. I'm not profitable. And it's like, how do you know? Well, that's because everyone seems to teach courses based on themselves and what works for them. And what they really should be doing is teaching traders how to think for themselves. Teaching traders how to develop their own their own setups, right? And it's just a personality thing. I'm really obsessed with psychology. People fascinate me. They always have. I'm a bit of a weirdo. If you haven't figured that out yet in this live stream, stick around for a while and you eventually will. I'm just kind of a weird guy, and I always have been. And I've always had trouble kind of understanding people and why they make the decisions that they do and why they behave the way that they do. So since I was a little kid, I've kind of been obsessed with like human behavior. And so as I've gone on my own journey of learning to trade, I've taken it from a standpoint of human behavior. And when I started coaching other people and trying to teach them how to trade, I learned that it's like what works for me doesn't work for a lot of other people. And so that's where I sort of realized this sort of aha moment of like, oh, every single person has to have a system that is tailored for them. They got to figure it out on their own. I can't give it to them. But what I can give them is the process to go through to be able to have that success. And that will save them years of painful losses. And so that's why, if you go to the top of the website, that's why I say this is the last trading course you will ever need. I'm not saying the day you finish the workshop, you're going to be a profitable trader. But I'm saying you're never going to have to take another course. I'm going to give you all the tools you need. And from that point on, it's just about you putting in the screen time and doing the work and developing your skills. In the same way, if you wanted to be a basketball player, I could teach you how to dribble. I could teach you how to shoot. But eventually, you just got to spend time on the court playing the game to get good at it. And that's what nobody in trading wants to tell you. But I will. So if you're tired of these BS courses that don't actually help you progress, you should consider investing. Invest in this course. Invest in improving your skills as a trader, changing the way you approach the medium so that you have an edge. I hope to see a lot of you there. All right. If you are a member of the Pirate Traders Brigade, head on over to the private stream and I will see you there in about 2 minutes. If you are not, I will see you here next Monday. Right now, this market is very, very bullish. As I said, what I was expecting was that we would get above yesterday's high and run out of steam and come back down. But instead, we are still bringing in more buyers. So this is a true bullish day, momentum to the upside. We are now targeting a move to 70.22 in the hours ahead. I do think the tempo is going to slow down significantly. So we got up here very fast. That's going to kind of come to an end over the next hour or two. We're going to do a lot more kind of grinding our way higher. But I do think we are now heading for 70.22 today because we are bringing in those new buyers up here. Okay. With that, I will say goodbye. I wish you all the very best. I hope to see you in the workshop next Monday. If not, I'll see you here on the Bookmap stream. Have a great day, everyone.